The Philippine Central Bank just hit a massive 1.2 trillion pesos in unrealized gains. That's a 70% jump from last year, all because they've been selling dollars in the foreign exchange market. This is the first time these gains have ever crossed the 1 trillion mark. While the peso keeps sliding against the dollar, BSP Governor Remolona isn't panicking. He's made it clear they don't jump into the market every day, only when things get too volatile. Right now, the peso is hovering around 57 to the dollar, but the central bank is playing it cool. The BSP is actually in a pretty interesting position. They're supposed to be building up their capital base to 200 billion pesos, but their contributions to the Maharlika Investment Fund, the country's sovereign wealth fund, have slowed things down. Despite this, their finances are looking strong. Get this, their net income for the first 11 months of 2024 shot up by 387% to 113.6 billion pesos. That's compared to just 23.3 billion during the same period last year. Their foreign exchange gains did drop a bit though, down to 38.6 billion from 55 billion. Overall, the central bank's assets have grown by 7.5% to reach 8.053 trillion pesos. This growth comes mainly from their international reserves and domestic securities holdings. Their liabilities also increased by 5.8% to 7.79 trillion pesos, mostly due to more currency in circulation and foreign exchange revaluation. What's fascinating is how the BSP is managing all this during peso volatility. They're not trying to artificially prop up the currency every day, but instead focusing on managing extreme swings. This strategy seems to be working for their bottom line, even if the peso itself continues to face pressure. The unrealized gains essentially represent potential profit from their foreign currency holdings as the peso's value changes. It's money on paper that could become real if they decide to convert those holdings. For everyday Filipinos, this means the central bank has a strong financial position to help stabilize the economy if needed, even as the currency faces challenges. The BSP's growing reserves provide a cushion against economic shocks, which might be exactly what the country needs in these uncertain times.